Precious metals in this kind of an environment where there's an unfixable financial system, that usually leads to higher precious metals prices because that's where we hide out when things look broken beyond repair. And I think that after the next election, already a lot of people are concluding that that's the case, but after the next election, and nothing changes financially, that's when a lot of people are going to conclude that we need to just bail on the system, stop trying to fix it, stop trying to play it, but just get out of it.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2024, while supplies last. First, we featured 2024 American Silver Eagles at just $5.95 over spot. Next, we have backdated gold 1/10 ounce Eagles at $39 over melt per coin. And finally, we're offering Dealer's Choice Constitutional Silver half dollars at $2.50 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend John Rubino from rubino.substack.com. John, thank you so much for joining us today.
Hey Elijah, thanks for having me on.
Well, it's great to have you today. And I did want to discuss the precious metal markets. We are recording this on Thursday. We're seeing quite a bit of a pop in the metals today, and I guess the last couple days here. I know one of the triggers seems to be probably the CPI number, showing that inflation for the month of June was actually negative, still about 3% year over year here. But your take on that and what it might mean for the Fed's decision going forward?
Well, they really want to start easing again. You know, this high interest rate thing is very unnatural for central bankers in today's world. And they want to get back to what they consider normal, which is interest rates much lower than they are today and money much easier. So this gives them a little bit of cover for doing something like that when even 1 month of inflation comes in negative, when it's something they already wanted to do. Maybe that'll be the excuse that they need. And then at the next Fed meeting, they'll actually cut interest rates a little bit. I would say that, from the standpoint of where we are in the economic cycle, that it is time for interest rates to start going back down. But I wouldn't want to say that there are any policy options left for the Fed that saves the current system. You know, this is strictly leaning against the coming recession. But there is no interest rate that fixes the fiat currency world or fractional reserve banking or global military empire. There's nothing monetary policy can do to fix the big things that are broken. So it could well be that we're starting to see a slowdown, and it might turn into a recession in the year ahead, and the Fed's going to ease and everything. And those normal things will happen. But the bigger picture is much scarier than that. So I think we might have a recession coming. And as investors, we have to figure out what to do about that. And I think that the Fed going back to easing again is the way the markets responded today. It's good for gold and silver. And with the amount of money that's in the world right now, the amount of credit that's out there, the amount of bad debt that's out there, precious metals are a very attractive conceptual investment. And the Fed cutting interest rates just gives an extra excuse to anybody who wants to load up on precious metals. So, I think that's the picture from the standpoint of gold bugs and stackers, is that we're heading in the right direction for the next leg of the bull market.
And I wanted to dive into that a bit, the reasons for why we're headed towards a recession. You recently wrote an article about jobs numbers and also the housing market showing that a recession is ahead. Can you expand on that?
Yeah, well, all economists and financial analysts have indicators that they like, which they believe have some kind of predictive value. And there's dozens of indicators out there, and everybody has their own favorite set. But right now, there's a gigantic number and a growing number of indicators that are pointing towards a recession. Now, the way this works, an indicator is some kind of financial data series, and you can graph it, and you see what it did before the recession of the 1980s and the recession of the 1990s. And if it does the same thing over and over again, and a recession ensues, then it's got predictive value. there are tons of stats out there today that are all pointing in that direction. They're all doing that thing that they did before the 1990s dot-com bubble burst or before the housing bubble burst in the 2000s. So you really got a nice choice of indicators all pointing in the same direction. And, the jobs market is one in the US where it's not nearly as healthy as it seems. And we're starting to lose full-time jobs, which you wouldn't be doing in an expansion. And all the real estate indicators now are pretty much terrifying. You look at commercial real estate, where the default rates on big office buildings are rising, and the occupancy rates on office buildings are falling, and defaults and delinquencies are spreading to things like apartment buildings, things like that. Well, if a lot of big pieces of real estate are going to be sold at losses in the coming year, which is what it means when there are defaults and falling occupancy rates, then somebody's got to take the losses, and it's going to be the banks. And the banks are then going to have to report losses on their own earnings statements, which will scare depositors away, which will cause the banks to have to sell even more depreciated real estate and other assets, and so on until you get a banking crisis. Well, the real estate indicators are all pointing towards something like that happening. And kind of same thing in housing, where you've got the average person no longer able to afford the average house. Housing affordability is a really reliable indicator. And when that happens, when people just can't afford to buy houses anymore, home sales dry up and home prices start to plunge. And we're seeing that now in housing, where home sales are just minuscule right now. There's a rising inventory of homes for sale, especially new homes for sale on the market. Prices have not yet come down, but as the inventory goes up, prices are going to have to start to fall in order to incent or to allow people to be able to buy houses again. So things like that. And, it goes on, but there are just so many indicators that all point in that same direction, that we're going to have a serious slowdown next year. And it could turn into a recession that's potentially dangerous because there's so much bad debt out there. So that's when things get interesting. Not, that we're having a recession is just normal. A business cycle does that. But when there's so much financial fragility in the marketplace and the global economy, when a recession happens, you risk lots of other things blowing up besides the things that caused the recession in the first place. And that leading to something much more serious than a garden variety inflation. We faced that in 2008, 2009, where the housing bubble burst. And if we were a healthy society back then, a little housing bubble burst would have been no real big deal. But there were so many bad derivatives out there, for instance, and stocks were wildly overvalued. And it was just the kind of environment where one thing can start knocking down other dominoes, and you get something like the Great Recession or something much more serious than the Great Recession. Well, we're back there again in that same place where there are all kinds of things that could go wrong and could just wipe out different sectors of the economy. And they're all kind of ready to happen. So we're looking for the catalyst, the one thing that starts the ball rolling. And then we see what the Fed does, and I suspect they'll panic on the monetary easing side when this starts happening, because they see all these bad indicators out there and all these imbalanced industries that are kind of ready to go. So I think we'll see the recession happen, and then it gets interesting, because the Fed's response will probably be what in normal times would seem overblown, but it'll be very big because they see the risks that are out there.
Now, it seems to be kind of two different things happening, and maybe it's the time frame for both of these to take place, right? Because I see, housing prices are rising, right? And if we see Fed easing, then it seems like prices in general and inflation will continue to rise. But at the same time, we already see housing pretty overvalued if you compare it to what the average person can actually afford. So how do you reconcile those two things? Do you think that there will be a housing crash and then we'll see kind of a crack up boom because the Fed will be easing? How do you see this playing out?
Well, home prices go up until they become unaffordable, and then they have to go back down, because by definition, if nobody can afford a house, prices have to fall to allow them to afford houses. Um, and we're kind of right at the end of that process right now. Home prices have been going up. Actually, we still think of the 2000s as the housing bubble decade, but house prices have actually gone up more in the last few years than they did between like 2004 and 2007. So we're back in that place again. Only this time there are some new players with massive amounts of houses on their balance sheets that are likely to panic. And so that's why when you see home prices going up and inventories going up, but sales not rising to match those other numbers, you get kind of what we have today, where people can't buy houses, but there are still cash buyers like Wall Street hedge funds in the market pushing up prices, but it can't go on for much longer. And in housing in particular, you got these new players coming in. One is the Airbnb industry, which really barely existed back in 2007. But now, in the last few years, times have been so good in the housing market because interest rates have been so low that you see a lot of people having built up little empires by buying 17 houses or 25 apartment units or whatever. And things are no longer working out for these guys the way they hoped that they would. It's just not that profitable a business now. And that's leading to a lot of them. And interest rates are up. So to the extent that they have to refinance their properties, they have to do it at a higher rate. So they're making less money. Their interest costs are rising. And a lot of them are looking at cash crunch, leading to a default, leading to bankruptcy. So you're going to see a lot of those guys start dumping inventory going forward. That's almost a given. And then all the private equity companies and hedge fund companies that have been buying up whole neighborhoods for cash and then converting them to rentals, when prices start to roll over, that'll pull rents down, and that's going to make their business model a lot less tenable. And they've got huge inventory. And what Wall Street normally does is they pile in towards the end of a bubble. And then the guys that got in last have to start selling because when the bubble bursts, they go bankrupt first. We'll see that again with the private equity landlords out there. So potentially what we're going to see is housing roll over and then all this inventory just pour into the market, leading to a big decline in home prices. Okay. And, very hard times in the home building industry and the ancillary industries that feed the home builders, lumber companies, factory or furniture makers, people like that. So you get the potential for a pretty serious recession just from a housing bust. But we've got all kinds of other things going on right now. So the everything bubble is not going to be just one bubble. It's going to be a bunch bursting either sequentially or all at once. We'll have to see. But we've created the conditions for that to happen in the next year or two. So, and again, the Fed is aware of this. They see the potential for a lot of things to roll over, causing very big crises out there. And they really want to start easing to try and head that off. And that's where they are right now. So they'll take whatever excuse they can legitimately hide behind to start easing. It might be September, it might be after that. We can't know that, but it's very possible that it happens sooner rather than later.
One crisis that the Fed can't necessarily control and is a bit separate, at least is supposed to be separate, is the politics of the current elections here. And also, we're also seeing in Europe some chaos with respect to the elections playing out there. So your perspective on how all of that is going to be impacting the financial system going forward in the coming months?
Well, one of the general rules of thumb about politics and economics and geopolitics is that when you screw up your finances, you screw up your politics. Because when you take on too much debt and interest rates start to rise, things get really hard for people. And those people are voters, and they start looking around for alternatives, and they're willing to consider people from outside the mainstream because the mainstream is clearly failing. So you get things like, there's a populist revolution happening all over the world right now, although populism is defined as different things in different places. But you're seeing parties that were outsiders until recently move into the center. In other words, they get enough votes to be part of ruling coalitions or actually just the ruling party. And you're seeing that in very recently in Great Britain and France. With Great Britain, for instance, the Conservatives were in power for something like 12 years, and they just got booted out of office very unceremoniously and replaced by the Labour Party, which is by American standards far left wing. And they have a supermajority to do anything they want to. So I think you can expect open borders and higher taxes, at least. Oh, and higher government spending, obviously. And in France, something similar happened, but more surprisingly, where it looked like the populist right party, run by Marine Le Pen, was going to win and was going to be the governing party after the election that happened last week. But in that election, that didn't happen. Marine Le Pen's party came in third in terms of seats in parliament. And the far left coalition, and they're seriously far left by our standards, gained the most power. And it looks like they're going to be, at least part of a governing coalition, and maybe they're going to be the dominant party in the coalition. They're already talking about a 90% marginal tax rate on incomes over $400,000 a year. So, we're seeing earthquakes financially and not good ones in Europe. And then in the US, you've got an election that nobody expected to happen. Because on the one side, was Trump, where he already lost an election. So normally you don't run the same guy that lost in the previous election again. So he was unlikely until he started running, and it became clear that he was popular with the Republican base again. And then he's got all these court cases to deal with, where they've weaponized the justice system against a political candidate, which is just a terrifying precedent. Okay, so that's the Republicans. On the Democrat side, they tried to run a dementia patient and lie about it, and those lies were finally exposed. So we've got one of the most chaotic elections imaginable going here, and it's reasonably possible, not guaranteed in any way, but completely within the realm of possibilities that the Democrats dump Biden. They find a way to do that and then replace him with somebody else. But that's a really fraught process, because none of the candidates that they would put in Biden's place are free from potential scandal or good enough politicians to pull it off. There's nobody that's perfect. So what they might do is just let Kamala Harris, the vice president, become president when Biden steps down before his term ends. And then she runs as president, but she's a terrible politician. She ran for president once already. And in the primary, she started out as one of the leaders. And as people got to know her, her polling dropped and dropped and dropped until she was at like 1% heading into the California primary, where she was going to get crushed in her own state. So she dropped out. So she is absolutely not any kind of guaranteed winner. So we're looking at a very chaotic election, and either side that wins is stuck with a financial system that's already broken. There's no real fix out there. So, politics is an exciting sport, and a lot of people think that their guy will fix things if he can just get in. There are some things that can be fixed, and one big one is that the next president manages to avoid World War III, which we're blundering into right now. So if that's all that happens, whoever stops our progress towards World War III is Winston Churchill, as far as I'm concerned. But as far as the financial system goes, unfixable. We're running $2 trillion deficits as far as the eye can see, and there's nothing we can do about that. And that's going to, increase the amount of debt that's out there, which increases the interest costs on that debt, and so on. And the Fed's only response is to try to lower interest rates in order to keep the debt costs, which have to be borrowed, from sending the total amount of debt into some kind of death spiral that we can never recover from, which I would argue are kind of already in that death spiral. But if the Fed cuts interest rates dramatically in order to lower government interest costs, they risk sending the dollar into free fall. We already found out in 2022 what a dramatically increased money supply does to prices. We had almost 10% official inflation, which added to the chaos of current politics, and so there's no fix for any of this. So we shouldn't get our hopes up, even if the election goes in a smooth way and somebody we like gets elected. We shouldn't have any illusions about the financial system being fixed. We can hope for the border being a little better controlled and our geopolitics becoming a little bit less dangerous and chaotic. But the financial crisis is still out there waiting to happen no matter what. And if we avoid World War III and we buy ourselves another 10 years, within that time, the system is going to break. The fractional reserve banking, fiat currency, global military empire thing is going to end because there won't be any money left or any valuable money. There'll be plenty of currency out there, but there won't be any actual wealth left to prosecute the wars and to maintain our deficit spending and to support our currency. So the financial system is the thing that is going to break regardless. A few other things can be fixed, but there's no way around a gigantic financial crisis. And which kind of takes us back to the gold and silver story, precious metals in this kind of an environment where there's an unfixable financial system. That usually leads to higher precious metals prices because that's where we hide out when things look broken beyond repair. And I think that after the next election, already a lot of people are concluding that that's the case, but after the next election, and nothing changes financially, that's when a lot of people are going to conclude that we need to just bail on the system, stop trying to fix it, stop trying to play it, but just get out of it. And that's when you get the crack up boom that you mentioned before. So we've created the conditions for something like that, and it could easily happen in the next couple of years when the current election results don't actually fix anything major.
And you mentioned how the political chaos we're seeing is really a symptom of the financial chaos. Can you expand on that? Like, why are those two connected?
Yeah, when a government borrows way too much money and then starts convincing its citizens to borrow more money than they really should in order to manage all the bad debts that are out there already, everybody's life gets harder. In the US, let's just take a couple of examples. The average person was not much more than getting by in 2019. You had a handful of very rich people in the US and a shrinking but still existing middle class, and then you had a whole lot of people, maybe the bottom 50% of the economic ladder, kind of sort of able to put food on the table and feed their kids and drive to work. But then in 2020 to 2023, inflation, because we created too much new currency and generally screwed up the financial system, that raised the cost of living for those people in the 50% by 30%. And it left them with maybe not the ability to do all three things that they've got to do, put a roof over their head, feed their kids, and drive to work. So people who are in that situation are not going to listen when the politicians tell them, yeah, but the economy's great, inflation is only 3% and unemployment is 4%. What they know is that they can't pay their bills. So they become very volatile voters. In other words, they're willing to look at ideas that are coming from far out of the mainstream because the stuff in the mainstream isn't working anymore. And you see variations of the situation all over the world because for the past 30 or 40 or 50 years, we've been making these same mistakes. We've been borrowing too much money. We've been encouraging people with artificially low interest rates to borrow money themselves. And now you've got a world of over-indebted people and over-indebted governments. So the governments don't have the extra money that they need to take care of their people. The people don't have the money that they need to manage their own lives. Everybody's mad. And the politicians are the ones that suffer for that because they're perceived to have caused a lot of the troubles that are out there. So if you're a sitting president or prime minister or member of parliament or whatever, you got a really tough situation on your hands because nobody believes that you're competent because you have not proven it so far. So they're willing to replace you with basically anybody with a good story. So in Great Britain, watch Nigel Farage He's an outsider. He was the guy who basically engineered the Brexit vote and was successful with it. Now he's formed a new populist party. It got a lot of votes in the last election, but when the current Labour Party fails, as they will, he's going to be the guy who's standing there saying, "Look, you've tried everything else. Now try what we have to offer." And so you're going to see this party that didn't exist 2 years ago become the ruling party in a major country. Same thing in France. The far right party was their roots are in basically the neo-Nazis from World War II. And that's a tough hill to climb, right? If those are where your roots are from, but they are going to get their shot when the current left-wing coalition fails. So it's going to be chaotic, but it's completely predictable because we've screwed up our finances on such a vast scale that nobody who's trying anything right now has the slightest chance of succeeding. So in that sense, you can predict the failure very easily. And then it's a little tougher, but not that hard to predict the chaos that follows. So that's where we are as a world right now. There's virtually no major government that has avoided these problems. I'm leaving Russia out of this, though, because Russia actually avoided these kinds of financial stupidities because they basically paid their debt off. And they, up until very recently, were producing enough oil in order to pay most of their bills. So they avoided what the rest of us blundered into. But for the rest of us, for most of the major European countries and the US and Canada and a lot of big countries in Asia, same thing, rising interest rates or crashing currencies, choose one. And that's basically all they've got to work with going forward.
I think it's a frightening path forward, but it's important to, take control the way that we can and to prepare for these things. And we really appreciate your time today, John. If people are interested in learning more about the practical steps towards preparedness, I know they can go to your website, rubino.substack.com. Can you share with us a bit about that?
Yeah, that's a Substack newsletter that is basically, it basically takes the premise of what we've talked about and just accepts that the financial world is heading south fast. And looks for actionable ideas for dealing with it. In other words, it's kind of a prepping newsletter, although it's mostly about investing, but there's a lot of other lifestyle related and skill set stacking kinds of things that all will help us be resilient and prepared when the time comes. And so far, so good.
Fantastic, John. We really appreciate your time today. Any last thoughts before we let you go?
Yeah, well, I think what we ended with is really important, Elijah, because all the stuff that we talked about is kind of well understood by a growing number of people. So we don't need to repeat it as much as we need to look for solutions. And there are a lot of solutions. This is the crisis that's coming is basically an investment thesis. What goes up when all the traditional financial assets like stocks and bonds go down? And which stocks within the universe of the stock market go up against the tide of overall falling indexes? And, there are answers to those questions. So there are things we can do. And as long as you're focused on doing a positive thing that's going to pay off in some kind of a beneficial way going forward, then you can not necessarily be optimistic, but you can be calm and focused. And to know that you and your family will be in better shape than they would be otherwise if you weren't doing these things. So it's a good mindset as well as a financial strategy to take this stuff seriously and then think of it as an investment thesis and look for solutions.
All right. Once again, John Rubino from rubino.substack.com. Thank you so much for your time and God bless.
Thanks, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2024, while supplies last. First, we feature 2024 American Silver Eagles at just $5.95 over spot. Next, we have backdated gold 1/10-ounce Eagles at $39 over melt per coin. And finally, we're offering Dealer's Choice Constitutional Silver half dollars at $2.50 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.